Welcome to this training video on digital lending. Digital lending is the use of technology to manage the end-to-end lending process from loan application and credit assessment to approval, disbursement, and repayment without the need for traditional paper-based or manual workflows. It enables banks and financial institutions to deliver faster, more transparent, and more convenient borrowing experiences, leveraging automation, analytics, and omni-channel access. With our integrated loan origination and loan management platform, customers can experience a truly seamless lending journey from application to closure. Through our omni-digital approach, we enable access across multiple channels: mobile apps, browsers, WhatsApp, Facebook Messenger, and web chat, supporting both self-service and assisted modes via agents or branch staff. During origination, the system captures key parameters such as assets, dependents, and income to calculate affordability score, providing customers with a personalized eligible loan amount based on their financial profile. It also integrates with leading credit bureaus and uses an inbuilt credit scoring engine to ensure accurate eligibility checks and risk assessments. Once a loan is approved, the LMS takes over managing disbursements, repayments, schedules, accruals, and closure, ensuring customers and staff have full visibility and control at every stage. This unified approach not only streamlines operations but also enhances customer satisfaction through transparency, speed, and convenience. Now, we will learn how to create a new loan product in the loan product management. We are creating this product to define its complete configuration, from basic details and eligibility parameters to repayment rules, status flow, and accounting entries, so that it can be offered to customers and processed seamlessly in the system. A well-configured loan product ensures accurate interest calculations, correct repayment schedules, smooth transaction posting, and compliance with the organization's lending policies. We begin by defining the essential details of the loan product, like product code, which is a unique identifier for the product. Product name is the name that will appear to users. Product type to be selected from options such as personal loan, mortgage, auto loan, business loan, or education loan. Product description is a summary based on product requirements. Start date and end date for defining the period during which the product is active. Next, we configure the loan's financial limits and rates, like minimum loan amount and maximum loan amount, which specify the allowable loan range. Minimum interest rate and maximum interest rate, which define interest boundaries based on the loan range. We now set how the loan will be processed and repaid, like repayment frequency, which is to choose daily, weekly, monthly, quarterly, half-yearly, or annually. Holiday processing decides whether processing occurs before or after weekends or holidays. Reminder days to set how many days before the due date reminders are sent. Rounding method to choose from: truncate, round down, round up, round nearest, or banker's rounding. Auto closure to decide if the loan should automatically close after full repayment. Reminder time to set the exact time for sending due date reminders. Here, we configure how the system tracks and changes loan statuses, like status sequence, the order in which statuses appear in the workflow. Status code and status name are the unique identifier and descriptive name. Overdue days to set how many days before a status is considered overdue. Base status to mark as true or false. Special status settings, which configure statuses for first overdue status, escalation status, accrual suspended status, interest accrual reversal status, penalty interest reversal status, penalty principal reversal status, closed status, write-off status. The final step is setting up accounting entries for loan transactions. These may include dispersal, accrual, repayment, interest, penalty. For example, if setting up a dispersal, define two entries, one for debit and one for credit. For each, specify transaction code, location, transaction amount, account or placeholder account to be credited or debited. Once all details are entered, from basic information to transaction definitions, the loan product is successfully created. It is now ready to be used in loan management and loan origination workflows, allowing the bank to offer it to customers, process applications, and manage repayments efficiently. Loan onboarding is the initial stage in the lending process where the bank collects and verifies all necessary customer information to assess eligibility and process the loan application efficiently. Using our AI-powered platform, this process is streamlined end-to-end from capturing applicant details to affordability checks, document verification, and final submission, ensuring faster turnaround times, reduced manual effort, and improved accuracy. We start by selecting home loan application in the loan onboarding module. We begin with the applicant's basic contact information, entering the mobile number and email address. After that, we move to personal identification, where we select the branch handling the application. Choose the primary ID type such as national ID or passport, and upload the ID image. Once uploaded, our AI platform automatically extracts the required data fields from the document. From there, we capture the address details for the application. The next section covers income and employment information, including employment status, employer details, monthly income, and annual income. We then carry out the loan affordability assessment. Here, we check for existing loans, record monthly expenses, and decide whether they should be counted in the affordability calculation, and note the type of accommodation. Based on these details, the system calculates the affordability score. Following this, we record legal clearance and ownership information, and enter any collateral details. If the application involves others, we also capture details of a co-applicant and/or guarantor. We then specify the purpose of the loan, such as property purchase, construction, or renovation. All required supporting documents are uploaded at this stage. Finally, we complete the declaration and signatures, set the loan terms including interest rate, repayment schedule, and tenure, and submit the application for review and approval in the loan management system. A loan contract is a legally binding agreement between the lender and the borrower that clearly outlines the terms and conditions of the loan. It includes key details such as the loan amount, repayment schedule, interest rate, applicable charges, collateral, if any, and the rights and responsibilities of both parties. In essence, it serves as the official document that governs the lending relationship from approval to closure, ensuring transparency, accountability, and legal protection for both sides. Once the loan application is submitted, we move into the verification stage for contract creation. In this stage, we cross-check all the submitted details and, once verified, approve the application to successfully create the loan contract. We begin by navigating to the loan contract section and opening the drafts list. Here, we can view all the details of the application. At this point, we can set the interest rate type, review and configure repayment settings, such as the frequency of principal repayment, whether monthly, quarterly, or another interval. Set the interest repayment frequency. Enter the value date and tenure in months. Based on these inputs, the system automatically generates the repayment schedule, displaying details such as installment dates, component types, and due amounts. Once the contract details are finalized, we submit the application for approval. It then appears in the pending approvals list. Here, we carefully review the application again, cross-checking all submitted information including personal details, financial data, and supporting documents against the bank's policy and compliance requirements. If everything is correct, we approve the application using the inbuilt configurable workflow, which ensures the process adheres to institution-specific rules without manual intervention. After the initial approval, we proceed to the customer signature stage. The signed contract, whether physically scanned or digitally signed, is uploaded into the system. We then perform another verification check to ensure the signed document matches the approved contract terms. The next step is to enter the disbursal amount, the actual loan amount to be released, and, if required, record any pending document requirements for compliance or operational tracking. This triggers the final approval stage for disbursal. Once this is cleared, the contract status updates to successful contract, indicating that the loan is fully activated, funds are ready for release or already disbursed, and the account is now set for regular servicing, including repayments and interest calculations. Once a loan contract has been successfully created and the loan amount has been disbursed to the customer, the next stage in the lending lifecycle is loan servicing. Loan servicing is essentially the ongoing management of the loan, making sure that every payment, adjustment, and event that happens after disbursement is tracked, recorded, and visible to both the bank and the borrower. Why is this important? Because a loan is not just a one-time transaction. It's a relationship that may last months or even years. During this time, the borrower will make repayments. There may be partial or full settlements, penalties might be applied for late payments, or certain agreements may need to be renegotiated. Loan servicing ensures that all these activities are captured accurately. The financial position of the loan is always up to date. Both the bank and the customer have full transparency. Think of it as the control center for a loan where you can check the current health of the account, see its history, and take necessary actions. When we first enter the loan servicing module, the dashboard provides a complete application overview. You'll see loan summary including the loan reference number, loan amount, customer's name, mobile number, loan application number, interest rate, and the current loan status, loan details like product code, product description, currency, and other classification details, outstanding information like current status, total disbursed amount, total outstanding balance, principal repaid so far, and interest repaid. This section is your quick snapshot. It tells you at a glance how the loan is performing and where it stands financially. Under the disbursement section, we can manage and review all payout activities related to the loan. The summary view shows the total loan amount approved, the amount already disbursed, the remaining balance available for disbursement. The disbursement history provides a detailed record, including transaction ID, disbursed amount, drawdown account, tranche information, status of the transaction, any remarks or notes. If you need to create a new disbursement, it's straightforward. Enter the disbursement amount, specify the disbursement date, provide the account number and bank name, set the transaction status. One of the most critical areas in loan servicing is the repayment schedule. Here, you can see a complete breakdown of installments, each marked as paid, pending, overdue. Alongside each installment, you'll find its component type, such as principal repayment, interest repayment, penalty on interest, penalty on principal. This breakdown is important because it shows not just whether an installment is paid, but also what portion of the payment went toward each type of loan component. In some cases, repayments need to be handled manually. For example, if the borrower wants to make an advance payment or settle certain components outside the scheduled date, here's how manual repayments work. You start by entering the total repayment amount the customer wishes to pay. The system then automatically fetches the component-wise breakdown, showing the outstanding amount, allocated amount, and any remaining unpaid amount. This breakdown includes details such as penalty on overdue interest, penalty on overdue principal, overdue interest, overdue principal, interest due, principal due, total outstanding amount. To process the repayment, a verification code is sent to the customer for confirmation. This process ensures security while also maintaining accurate allocation of repayments to the correct loan components. When a customer wants to close a loan, loan servicing provides multiple closure options, like full settlement, when the borrower repays the loan in full, negotiated settlement, when the bank and borrower agree on a different amount to settle the loan, write-off. Used in cases where repayment is no longer expected. To process a closure, we have to select the closure type. Enter the closure date. Record any reason for closure. Specify any documents that need to be released upon closure, such as property papers in the case of a mortgage. Once the closure is complete, you can print or download the closure letter for records and customer communication. The loan events history is like a logbook of all significant activities that have occurred during the loan's lifecycle. For each event, you can see transaction ID, event type, event date and time, principal amount involved, interest amount, penalty interest amount, penalty principal amount. This is extremely useful when reviewing past activities. For example, if a customer disputes a penalty charge, you can quickly find when and why it was applied. Finally, the loan accrual section provides insights into the ongoing accruals for the loan, including interest accrual, principal accrual, penalty accrual. You can also see aging information that indicates how long amounts have been outstanding, which helps in risk assessment and follow-up planning. Thank you for watching this training session on digital lending. We've walked through the full journey from setting up loan products, onboarding customers, creating contracts, all the way to servicing and managing loans. With our AI-powered platform, every step becomes faster, more accurate, and more transparent for both customers and staff.